So today I thought I'd do a video talking about Beyond Meat because we've not talked about this stock for a while, and I thought, you know what, it's about time that I kind of say what my current thoughts are with this stock, what my plans are with this stock, and everything like that. So yeah, a bit of an update, it's well needed. So yeah, we'll go through Beyond Meat and what's been going on. So originally I bought into Beyond Meat probably about a year and a half ago. Bought in it a year and a half ago, it was having a bit of a slump, looked at it and thought, okay, it's not actually doing too bad financially at that time, and I thought, what is the moat? What is Beyond Meat's future direction? And I thought the TAM here is a really good opportunity, because you look at this and think, okay, it's a fake meat product. I've tried the product, I thought it was a pretty good product. You look at the TAM here and you're thinking, fake meat products is something that's been trying to catch on for a while. Previously I've tried a few of the fake meat products and it was basically like eating plastic. They were awful, and you're thinking, well, no wonder these fake meat products are really struggling to. Maybe for vegetarians and vegans, it might suit them, and they might be happy with them products. But the big thing I think is someone coming into this market and going, you know what, having these meat eaters go, I can sacrifice not having that meat product and having this alternative because it's just as good. And I think that's what this market is crying out for, is someone to come out with a plant-based product that basically goes to all the meat eaters and they say, you know what, I can justify not having that meat-based burger because this fake meat product, this plant-based product, is just as good. And I think that is the big change, or the big pullover, or the big change in TAM that is needed in that area. And I thought Beyond Meat have that. It's the first product I've seen that would get them meat eaters from a taste point of view across to eating a non-meat product. And I thought this is going to be potentially a very good opportunity. Now, I think that there's a few key points here. First of all, why would people want to change from a meat product to a non-meat product? Well, for the economy, it's a lot better. For pollution, it's a lot better. And especially right now, what in the last few years has gained so much momentum is sustainability. And I think that when you talk about that and the education comes through, and this product is a lot better for the environment, that's obviously going to be a big driver to switch into this product. I think the next big driver is if it's a healthy product and it tastes as good, that's going to be another big driver for Beyond Meat. The third one being that when you look at the process that your current meat-based products will go through, is that you're basically having an animal that's raised and then slaughtered, and which I don't actually think there's that too much education on. When you actually look at that process and you think, realistically, a lot of this is hidden away in a lot of places where the animal slaughtering going on. It's a bit of a horrible process. It's all hidden away from the public eye. If people are actually witnessing what goes on with that process, and this isn't me coming on and preaching about switching to meat, meatless products, I guess, but it's a pretty horrible process, and you can save that animal from going through that process by switching this product. So you're saving an animal that basically getting slaughtered. And I think when you put that into the point of view that eventually, if Beyond Meat gets to the point where they can actually produce their products and the same as the meat prices, why would you not switch to that product? Even if it's just 1 or 2 meals a week, why would everyone not switch to 2 fake meat products a week? If it's better for you, it saves the environment, it saves an animal being slaughtered and going through that horrible process, and it's the same price, why is everyone not going to switch there? And that's my whole reason for really investing into Beyond Meat, and that's the basic TAM of it. And I think the product and the offerings they have is pretty good. And then when you factor in that they acquired or got some really good deals with likes of Pepsi and food service deals coming in, expanding into like the chicken category, I thought, okay, there's some good growth sectors for them here coming up in the next few months, which will be interesting to watch. So that was basically the whole reason that I got into Beyond Meat. And what we're going to do now is we're going to flick into the numbers as well, which is probably the most important bit to look at on what looked promising for Beyond Meat and now isn't so promising. So a year ago, this company was starting to look like it was in a very good position. So this is actually the second quarter 2021 results, 5th of August. You can see here the revenues increased 32%. I'd like it to be slightly higher in that 40% range, but it's still not too bad. The big thing was the food service channel. You know, what I talked about earlier is watching these food partnerships grow, and they grew 218% year over year. Now, granted, there was some bounce back from lockdown situations coming on, which you would expect some bounce back, but I thought with the current deals that are in place and what they're expanding to, this food service channel revenue would carry on growing at the rates that it is doing, as you can see here. And if we flick down to the numbers, you'll be able to see that the only problem was the US retail, which was declining 14%. Now, I thought that was going to be tough comps and that will come back and go back in the right direction. So I was okay with that because the other three parts of the business was positive. You know, food service was 269%. You had international at 198%. You had food service at 172%. So the other three parts of the business were incredibly strong. And I thought, okay, that can sort itself out, the retail part of the business. And as long as these numbers keep doing very well, we're going to be in a very good position here. And same on the losses point of view, like the company was doing okay on the losses. You know, you look at the gross profit, you know, it's around 47 million, which is pretty good for this sort of business. You know, they were investing heavy in getting new factories open, and I thought, okay, they're going to cut the G&A down in the next 12 months. You know, if they get that back down to 34,000-ish, we nearly break even now, and you know, the scale of production then from there will then, you know, generate and push us to profit in the next 12-24 months. And it looked pretty positive. You know, the gross margins were good, the revenue was doing really well apart from the retail in the US. And you know, this time last year, the company looked in a very good position. Now we fast forward to 12 months to last quarter. And last quarter was probably, I mean, there's no easy way to put it. I would say probably the worst earnings report that I read in the last earnings. It was horrible. You look at the retail, it bounced back. That was positive. You know, it was up 6%. Still not good enough, but it's moving in the right direction. So that was a positive. The food service, I have no idea what's happened here. That was down 7.5%. And this should be growing, you know, 30-40%. So that was a massive decrease in the food service, and that was with, you know, these new partnerships starting to creep in as well, which was massively disappointing. International retail massively fell off a cliff as well, down 6.2%. The food service part of the business down 8%. Same again, this should be growing like 30-40%. These two particular areas should be massive growth drivers for the company, which is not good at all. And you know, they did put a few blames on a few things, some slowdowns and everything like that. But these numbers should be a lot better than what they are right here. And then just to top it off, the worst part of this was in the losses. So check out how bad this got. The gross profit ended up being 190,000. That was nearly what we were talking about a year ago. The gross profit was 47 million, all the way down to 190,000. This is a massive reversal. And also the G&A ramped up massively, which is not great. Now they put this down to a few things like issues, switching products, ramping up the beef jerky, which apparently had not good margins. But these numbers are just terribly out of control. Like, this should be not this bad at all. And fair enough, you know, they're trying to get this beef jerky partnership with, you know, Pepsi going. But the problem is that this is supposed to increase the revenues a huge amount. So hopefully we see that coming in the right direction. But I don't understand, like, fair enough, I can see why they wanted to accept a deal with Pepsi. But this is hurting what it's suggesting. I can't remember exactly what the numbers were in the energy part. I think it was something like 18%. Hurting the gross margin is absolutely huge. So you've got to have a really good benefit from hurting the gross margins in that sort of way. Now, they say they're going to rebound, but this is a massive reduction in the financial performance in the last 12 months. Because you've gone from three parts of the business performing very well to now a place where not really, I would say the US retail is slightly moving in the right direction. But apart from that, the other three parts of the business have had a massive slump, and the gross margins have sunk massively. And I know there's going to be some pressures at the moment with what's going on in the world, you know, without a doubt. But to reduce that much, you know, you're nearly talking like a nearly 50 million reduction is not great. And that's the problem with Beyond Meat. And then what does that overall lead my opinion to right now, and what's the future? And am I going to buy the dip on this company? Well, I still think that what I said earlier, the potential TAM of this still exists. And I think in the next 5 years, there's potential for this stock to still do well. And that's why I'm not selling it, because I think the story is still there. and the potential market and TAM is still there. The only problem I have at the moment is the execution is terrible, especially in this last quarter. Hopefully it can rebound from here and get back to where it was, say, a year ago. But at the moment, the execution on the financials is horrible. And from my point of view, I've got to look at, do I want to really put my capital in this business right now? Do I want to buy the dip in this business right now? Because the thing is, when you look at this business right now, the financial performance of the company is like that. It's not going anywhere. In fact, it's probably even decreasing because of all the losses that it's taken on now. So the financial performance isn't great at the moment. And at the moment, if you look at the share price is kind of following that trend. So that share price movement makes sense. So I can't buy a company that I'm looking at seeing the financials performing poorly. Even if the share price is going down, I can't justify putting capital in that because I can't see a good financial performance at the moment. And especially right now, because in the stock market right now, in this bear market, we're seeing businesses with financials that aren't like Beyond Meat, they're actually going up, but the share price is going down. And those are the ones that don't make sense. Those are the unjustified sell-offs, and those are the really good buying opportunities right now. And those are the stocks that I want to be capitalizing on. I don't be capitalizing on, and capitalizing probably isn't even the word, I don't buy in the stocks that are having bad share price performance because the financial side of the business is not doing great. Because that's what Beyond Meat is right now. There's no way to brush over it. I'm going to be honest with you guys. At the moment, Beyond Meat's financial performance isn't great, so you can justify the share price drop. If you look at something like a DraftKings, a Hims, a PayPal, even a Google, even a lot of the financial performances are still moving in the right direction, but the share prices follow the same as Beyond Meat, and those are the ones that really I want to be using my capital to buy up them dips because they're unjustified dips. Right now, I can justify why this is dipping because it's not actually performing that well financially. So I don't want to be buying the dip at the moment because I'm catching what is a falling knife here. These are the stocks that I want to be avoiding because at the moment they're not performing that well. And I want to be focusing right now on the stocks that are falling, losing half the value, but the financial performance of the company is just accelerating and doing even better than improving year on year and isn't really having any effect financially, and it's just that business is getting stronger. So that's the problem with Beyond Meat at the moment, and that's why I can't buy it, and that's why I'm focusing on other opportunities out there where their financial performances are much better. So that's where I'm at with Beyond Meat. I'm not selling because I still think the long-term story is still there. However, I can't justify putting capital in at the moment when I think there's better opportunities out there. So yeah, I think this was a well-needed update on Beyond Meat. I hope you enjoyed it. We'll see where we're at probably in a few months' time. But yeah, if you could hit like button, if you can subscribe, and I'll see you next video.